Hi everyone, welcome to On Finance, and in this video we're going to cover bonds or fixed income. So first, let's have the definition. Fixed income debt instruments issued by a borrower to an investor, classified as medium risk, medium returns, require a specific duration, and usually recommended for moderate investors. So ano ba yung mechanics behind ng bonds? Merong group of investors and they wanted to earn decent returns. So i-invest nila yung pera nila, let's say for private corporation. So let's say San Miguel or Ayala Group, and then the private corporations will actually use their funds to, let's say, expand their business or fund their existing projects, let's say in a 5-year time frame. Now, in return, the corporations would actually give back an interest or what they call coupons investors. No, it could be quarterly or semi-annual, and then at the end of 5 years, which is the maturity of the bond contract, ibabalik ng issuers yung original investments ng investors. So, what are the examples? Meron tayong government securities. It could be treasury notes or treasury bonds and corporate bonds. Now, in bonds, we have this what we call credit ratings or evaluation of the creditworthiness of a borrower. And then the basis of ratings are, it could be the economic risk. So titingnan doon kung meron ba siyang potential impact sa business or sa issuer ng bond, yung economic situation, pwede rin yung, let's say, level ng competition sa industry or yung market position or share ng company. Pwede rin financial condition, looking at the financial ratios, or it could be the capital structure. So meron bang asset debt management? Is it in well or good shape? So tinitingnan yung mga 5 factors na yun in order for them to be graded or rated. So ano yung impact ng rates? Malaki yung impact ng rates pagdating sa yield ng bond. Okay, because they follow the rule of thumb in investing, which is actually the higher the return, the higher the risk. So the lower the return, the lower the risk. So yung mga AAAs actually nasa on top of the table, they're actually classified as investment grade bonds. So low risk sila kasi very good yung quality ng bonds. So sa baba naman, these are actually classified as, default or near to junk or junk bonds, meaning yung capacity nila to pay the obligation in, let's say, upon maturity, medyo questionable na, no? So they have a higher risk compared to doon sa mga bonds na may rates na AAA. So pag nilagay mo siya sa chart ng risk-reward trade-off, this is exactly the picture. Let's say meron kang specific bond na same type issued by a corporation and same tenor, let's say for 5 years. Yung isa meron siyang grade na AAA, yung isa naman meron siyang grade na CCC. So yung AAA would have lesser interest or coupon compared doon sa isang bond na rated CCC. Why is that? It's simply because of the risk-reward trade-off. Yung rated bond na AAA, low risk, so low return lang din. Yung bond naman na rated CCC, high risk, so kaya meron siyang high reward. Okay, so yung issuer ng CCC na rated bond, they need to offer it with a higher coupon to attract investors and at the same time to compensate the investors of the level of risk that they're actually embracing. Okay, so that will be all for now. Thank you very much for watching and see you in my next video.